Hello and good morning and welcome to Core Finance. I'm Matt Brown. I'm joined by Ricardo Evangelista, who is Senior Executive Officer at ActivTrades. How are you this morning, Ricardo?
Morning, Matt. Very well, thank you.
Well, thank you very much for coming back onto the show. We're going to talk all things FX with major currency pairs this morning. Let's start off with the euro. Certainly the euro's been going from strength to strength against the US dollar. It's given a little bit back of late in recent sessions, and we have the ECB policy meeting minutes, I should say, from September due out later today, and well, Mario Draghi has been indicating that October could be the month for when the QE tapering starts, but do you think he can deliver so soon?
Well, it's definitely more possible that it will happen, say, as soon as perhaps in the next few months than one could have thought by this time last year. However, the positive performance of the countries within the Eurozone and the positive signs coming from there have recently been sort of, that sentiment has been somehow capped by some political instability, especially coming from Spain and dispute in Catalonia. So we know that there was a referendum there which wasn't really seen as legal by the Spanish state. So the antagonism between the two parts has raised, especially after the events on Sunday, with the riot police intervening and loads of injured people. So that is somehow putting has put sort of a cap on this positive sentiment. So we should listen carefully rather, to what is going to be said at the time of the publication of these minutes, and take it from there. But I would probably agree with some analysts that think that maybe October or November will be too early for the starting of that tapering process on the QE policies.
Understood. And obviously we had the German election a few weeks ago. That's still playing out and probably will do for the next few weeks and maybe months. So that means overall kind of the euro, although it has been strong, maybe a lot of people now just looking to take some profit off the table and be on the sideline and see how it pans out, certainly in Spain and certainly in Germany for the moment.
Exactly. Also, we had a very positive speech by President Macron of France, where he laid out a vision for a Europe, a more federal Europe with military, economical, fiscal policies. So that could be seen as a positive sign for Europe. But somehow that then, a few days later, with the results in the German election and the rise of the far right, and somehow a loss of political capital by Chancellor Merkel, especially because of her policy towards refugees, etc. That's also acted as a counterbalance to that positivity that had arisen from President Macron's speech. So the euro is pretty much in the balance.
Understood. And speaking of elections, it probably leads on quite well to Japan and Japanese elections there. And the yen, certainly against the dollar, has been in quite a tight range. How do you think that election will pan out, and what could that potentially mean for the yen?
I mean, Shinzo Abe is a very able politician and is very experienced as well. Most analysts think, as you know well, that the chances of him winning another mandate with a qualified majority are quite high. That will have all sorts of repercussions. Also, we cannot forget that the election of the new for the Japanese central bank of the new chairman is coming up as well. So if Prime Minister Abe remains in power with a solid position, so it's likely that the status quo will be maintained in terms of the monetary policy. So the impact wouldn't be that great. But the yen is probably it's probably even more than the euro, the one that I would say is difficult to price at this moment, to price all these expectations, because alongside the political calendar that is coming up and the election you mentioned, we also have the status of the currency itself, which is seen as a safe haven. And we saw that at the time of the last peak at the Korean crisis, the yen gained a lot in value. So that's sort of simmering at the moment, that crisis. So we don't know, but at any moment it can start bubbling up again. So the yen is very difficult to price at the moment, I would say.
Understood. And speaking of, obviously, continuing the election themes, the pound, we had Theresa May speaking yesterday at the Conservative Party conference, and we've seen the pound weaken over recent sessions. It was the strongest performing currency in September out of the G10 currencies, but seems to be giving a little bit back.
Yes.
What's your take on the pound at the moment?
Well, there's been some encouraging voices coming from the Bank of England, signalling that the first interest rise in 10 years may be within our sights. So that has encouraged investors to look into the pound as a viable instrument. However, things are not that straightforward politically speaking at the moment. And we saw yesterday at the Conservative Party conference, it was almost a symbol of this turbulence, the speech, the so awaited speech by Theresa May, where all sorts of obstacles just kept coming up to her, and I think she handled it very well, considering. So she probably gained some credit there, some brownie points. However, it's a clear sign that politically things are not stable, and that will also have an impact on the currency. So obviously having an interest rise in November will support the pound, definitely. However, the policies of the Bank of England will to some extent be determined by the political stability and also by the political stability in relation to foreign policies, namely the Brexit negotiations. So I think it's quite an intricate web of factors that needs to be considered. I wouldn't be surprised if the pound was to suffer because of this.
Understood. And finally, well, if we're talking about major currencies, let's look at the US dollar. Not a great year for the US dollar, devaluing slightly, but it has performed fairly well over recent sessions. We had some strong ISM manufacturing data yesterday, and actually the macro prints seem to be quite good. Obviously, we're looking forward to non-farm payrolls tomorrow.
Yes.
The sell-off in the US, a little bit of a bounce. Do we think it's a downward trend for the US dollar in general, or potentially we could revisit some of the highs that we have seen over recent years?
Well, tomorrow's non-farm payrolls, which you mentioned, will be important. So that will somehow condition the sentiment of the investors. I think everybody is expectant at this stage to see what comes up tomorrow. What is the tone of the people that are responsible for these decisions when they talk about it? What is the spirit that they convey across? Are they positive? Are they not? Because everybody is looking into the possibility of another interest rise. Interest rate rise before the end of the year. We'll see. However, this it's quite likely it will happen, but the sentiment about it is also conditioned by another variable, which is Janet Yellen is leaving next year.
Yes.
And
potentially leaving.
Potentially leaving, exactly.
I'm sure she probably will in February.
Exactly. So she may be replaced. So people are looking as well who will replace her. At the moment, the front runner seems to be the governor of the San Francisco Fed, Mr. Powell, who is seen as not being so hawkish. So that is not an encouraging sign for investors, and it has somehow as well capped the sentiment that would otherwise be more positive, with the possibility of a further interest rise, and also with the positive signals coming from the economy.
Understood. Well, lots to digest there. Great insight. Ricardo, thank you so much for joining us today on Core Finance.
My pleasure. Thank you.